Hey, what's up, folks? What's up, guys? Welcome back. This is going to be our first live stream of 2026. Long time no see. So, let me make sure that everything is okay with my stream, which seems to be offline. Please let me know if you can hear me or see me. And there I am. Yes. Let me see. What's up, folks? Yeah, we're live. Awesome. Hello. Welcome back. So, please drop a comment down below and let me know if you want me to go over some stocks and take a look at what happened today, huh? We had a red day across the board. Nothing crazy. A lot of choppiness. Hi, Felicia. Hello. Yes, thank you. Yeah. So you can hear me and see me as well. Awesome. I want to show you something that the members of my Discord know very well, and maybe the members of Christian's server, especially the new ones, the newest out there in Christian's Discord, don't know very well, which is the magic of the 5-day moving average. Yeah, something that is worth pointing out. It's magical, the 5 DMA. Yeah, I have some interesting stuff to share with you today. A red day across the board, nothing crazy, a lot of choppiness out there. The Russell 2000 went down today 0.14%, the Nasdaq down 0.10%, the S&P 500 down 0.19%, and the Dow Jones went down today, how many points? Almost 400 points, down 0.80%. Hello, Philippos. CC, welcome, folks. Yes, guys. We take a look at the red day that we had today. Nothing out of the ordinary, but take a look at the 11 sectors that trade inside the S&P 500, guys. Not a good day out there from a breadth standpoint, and as some sort of general knowledge, you should know that we can say that for the most part, the most important 3 sectors inside the S&P 500, what you guys can see here are the 11 sectors that trade inside the S&P 500. All of you, if you're actively trading the markets, you should know that inside the S&P 500, we have 11 sectors. Yeah, 11. So inside or within those 11 sectors, we have 3 important sectors that actually affect in a significant way, depending on what they do from an intraday perspective, the S&P 500 or the SPY. What sectors am I talking about, you may ask? Technology, by far the most important sector, market cap wise, inside the S&P 500. Technology went down today 0.20%, and the financial sector, guys, got annihilated. Why do you think the financial sector got killed today? Down almost 2%. And mind you, guys, JP Morgan reported earnings today pre-market, and that was a fantastic report. They are killing it. It's, in my opinion, the best bank by far that we have in the United States of America. They killed it, but bank stocks got annihilated. And I warned you guys, by the way, because they've been at all-time highs? No, not necessarily. So I warned you guys in a live stream that I did on Saturday that most bank stocks after reporting go down. It's like a pattern that keeps repeating itself. So today wasn't the exception to the rule. That's what usually happens. But we keep getting news about this potential interest rate cap on credit cards. And this is bad news, not only for banks. This is bad news for everyone, guys. Yeah, it's actually a socialist measure. If this idea actually goes through, I am not going to get into a political discussion here. That's not what we are here for. But this would be very negative, not only for financial stocks. This is bad news for everyone. And of course, the financial sector or XLF got killed. Jamie said they are ready to fight Trump about that. Yeah, they should. This is bad news, guys. Bad news for everyone. This is not good news. This is a socialist measure. Why do I know that, guys? I guess that you can tell that I speak English with an accent. And the accent that you can notice comes from a socialist country. So I lived myself under a socialist regime. And this is bad news for everyone, guys, not only for bank stocks. This is a terrible idea. A terrible idea. But again, we are not getting here into a political discussion. That's not what we are here for. But the S&P 500 is unable to pull up a green day when you guys have technology going down, healthcare going down, and also the financial sector going down. That's it. So this is a recipe for a red day. Period, full stop. That's it. On top of that, another important sector inside the S&P 500, communication services, went down today. Meta got annihilated. I guess that you guys noticed that, right? Meta got killed. Ugly. And Google didn't have a good day. I mean, it closed in positive territory, but slightly green. So, with those stocks, with those two stocks going down, the communication services sector cannot have a positive day. And on top of that, take a look at consumer discretionary XLY. What stocks trade? What important stocks that you guys love, by the way, trade inside this sector, guys? Consumer discretionary XLY. What stocks are we talking about here? Both went down today, by the way. Do you happen to know? XLY, consumer discretionary. Those two stocks that you guys love. Oh, and you love those stocks. Tesi, of course, Tesi. What's the other one? They sell stuff online. Yeah, it's Amazn. So take a look at this. So today we had, out of 11 sectors, we had 5 sectors going down. We have six sectors going up and 5 sectors going down. But the sectors that went down today are very heavy, market cap wise, inside the S&P 500. That's why we had a red day. Yeah, nothing crazy. The S&P 500 went down today 0.19%. Let me take a look at the breadth that we saw today. I haven't checked on that. So inside the Russell 2000, we had 1,000 stocks going down and 863 stocks going up. Inside the S&P 500, I would say that we had a positive breadth. So more stocks going up than stocks going down. But let's go ahead and take a look at that. And take a look. Yeah, of course. We had more sectors going up than sectors going down today. So we had 262 stocks inside the S&P 500 going up today and 241 stocks going down. So a positive breadth inside the S&P 500. And let's go see the NASDAQ 100, the Qs. 55 stocks going down and 47 stocks did go up today. So a positive breadth in general terms. And if we take a look at a 4-hour chart of the SPY, guys, or the S&P 500, let me pull up here a 4-hour chart. Take a look. There's absolutely nothing wrong with this tape. Nothing. Zero. This is a technical chart that is under the total control of buyers. Period, full stop. Now, today we had a lot of shoppiness, guys. Take a look. 1 day, 1 minute. And you guys might be wondering, what is this blue line that I am pointing out with my mouse? Check this out, guys. Look. Let me pull up here our Discord chat. So this is our Discord. I have a channel, which is the Live Alvaro channel, in which I am pointing out levels of interest for the members of our Discord in English during the trading session. Take a look at these, guys, because today, and this is something that I also warned my boys and girls of Chris Saint's Discord, I was expecting some sort of profit taking at the open. I warned you guys about this. So take a look at this, guys. At 9:21 a.m., and again, this is our Discord in English, I posted this information. We are past all-time highs. This was pre-market, guys. 9:21 a.m. I said, we are past all-time highs. So no one should be surprised if we see a little bit of profit taking at the open. And now my question is, did we see profit taking at the open, guys? What do you think? And again, I don't own a crystal ball. Of course, I don't own a crystal ball, but yes, we did see profit taking right at the open. Now, circling back to this information that I posted in our Discord earlier on today, at 9:38 a.m. I said it's a shop fest, guys. It was a shop fest during the whole trading session. And take a look at this. So at 10:12 a.m., the SPY was, I'm not gonna say that falling off a cliff, but it was like falling nonstop. Take a look at the time. I am talking about Eastern Standard Time, of course, because I am located in the beautiful city of Charlotte, in the beautiful state of North Carolina. So at 10:12 a.m., take a look at the information that I posted here, and keep an eye on this, guys, because this is learning material. Take a look at this white line. This is none other than the 5-day moving average. So what information is a 5-day moving average showing you? It is showing you the average price of a security during the last 5 days or during the last 5 trading sessions. So look at this. That is your 5 DMA. Take a look at the time, guys, that I posted this information, 10:12 a.m. So I warned the guys in the Discord. That is your 5 DMA, $692.30, potential support zone. And then I said, VIX rising and SPY pulling back. You know what it means. This is an algo-driven pullback. So the second the VIX pulls back and SPY bounces, most stocks will be simply tracking the SPY. Then 10:24 a.m., guys. Test of the 5 DMA incoming. Potential support zone here, guys. Take a look at the time, guys. 10:24. And take a look at the screenshot that I shared in the Discord. I was pointing out $692.20 as a potential support zone. What happened afterwards, you may ask? Take a look at what happened, guys. And there it is. Nice bounce of the 5 DMA. Tradable as well. $693.60, $693.60 could be the next potential gap to the upside. And what do you know what happened here, guys? 10:46 and gap filled, guys. If the bulls recapture $693.60, they can keep going higher. And then afterwards, take a look at the bottom. So we managed to catch and trade today's low before noon, because then into the closing bell we broke $692.20 into the closing bell, and this level was recaptured. That implies that this 5-day moving average is very important, guys. It is very important. Take a look at this. So then afterwards we saw another test of the 5 DMA. So I posted this information at almost 1 p.m. Take a look at this. They broke our pivot, maybe headed down to today's low, $692.20, which was a level that was still coinciding with the 5 DMA. So since this moving average, guys, is showing us the average price of a security during the last 5 trading sessions, it is a very fast moving average. But since the trading session was a shop fest at 1 p.m., 1:30 p.m., the 5 DMA was still signaling $692.20. And take a look at what happened. I was suggesting at 1:57 p.m. that the SPY could once again find support over there. And take a look at what happened. It did bounce once again of the 5 DMA. I had a lot of traders, guys, in both communities, in Spanish and English, taking these trades. Based on what? On the 5 DMA, on the 5-day moving average. So I suggested to you guys pre-market that I was expecting profit taking. Look, 9:21 a.m., that's exactly what happened at the open. And then we had 2 bounces of the 5 DMA, pretty much to the penny. I mean, to the penny, actually. You can take a look at these screenshots. So you can use as many technical indicators as you want, guys. But I would suggest to you, this is a suggestion, of course, not financial advice. And of course, I am saying I am telling you guys this because of my boys and girls from Christian's Discord. I would suggest to you to use the 5DMA because I have all of my traders on both patrons in Spanish and English using the 5DMA, and I am actually calling out I am actually calling out levels of interest in the SPY during the trading sessions. But for my beloved partners of Christian's Discord, give it a try. Take a look at this. The 5-day moving average. If you don't know how to set this up, or if you don't use, or if you are not using Thinkorswim, you can use a 5 simple moving average on the daily chart. On a daily chart, that is gonna show you this. That so if you use a 5 simple moving average, it is going to be showing you the same levels that my 5-day moving average is showing us. And take a look at how we. So the 5DMA allowed us today, guys, to remain on what? On the right side of a trade all day long, as you guys can see here. So I also use the 5DMA, the 5-day moving average, in order to determine who is in control of a stock in minor time frames. So take a look at today's close. Let me pull up here once again a 4-hour chart. So we saw today 3 tests of the 5DMA. 1 day, 1 minute, 1, 2, and a third and last test of the 5DMA. And what happened here, guys? Buyers stepped in and defended price pretty well. So the tape remains bullish despite the fact that we had a lot of shoppiness today. The SPY going up and down, back and forth. But at the end of the day, the tape remains bullish, and of course, we are seeing a lot of weakness in, I would say, many stocks out there. You know, you probably know what stocks I'm talking about. So the Max 7 aren't doing anything. Software stocks got annihilated today. You name it, guys. ServiceNow, Microsoft, Snowflake, CrowdStrike, Palo Alto Networks. Those stocks have been performing in a very poor way. Let's just put it that way. Needless to say, Adobe. So we're seeing like very clear winners as of now inside the tech sector, but also we're seeing a lot of losers inside the tech sector as well. And I guess that most of you guys, or some of you guys, could be interested in having me review some of those stocks. So any questions so far, guys? Let me know about the power, the magic of the 5-day moving average. And if we don't have any questions, I can go ahead and go over some stocks. Nike, ASTS, Amazon, Tessie. Trump always screaming about communism, socialism. I am 100% on board with you. Yeah. Regulations are very negative for any economy, guys. And again, we are not going to be talking about that, but regulations are extremely negative. Yeah, 100%. Yep. I saw news that Netflix is considering changing its offer. Yeah, all cash offer. Yeah. We can start with Netflix. Sure, let's go see. This stock is a mess, guys. So I am a technical trader. 95% of the trading decisions that I make are based exclusively on technical charts. But when something is going on with a stock, guys, you cannot dismiss that situation. So in the case of Netflix, they are acquiring a very toxic asset from a financial standpoint because they are about to purchase, they are about to acquire Warner Brothers. And just take a look at this technical chart. It looks extremely ugly. So the net aggregate opinion of the markets is telling you that either Netflix made a bad decision, which could be the case, we'll see over time, or that the decision that they made about buying Warner Brothers is going to affect this company in a negative way in the short and medium term. So this is a clear downtrend below all the moving averages. We can make a case here if we want to be, like generous with Netflix, that into the closing bell, the bulls recaptured the 5DMA. But take a look at these guys, and circling back to what I just told you about the 5DMA. So again, guys, my 5-day moving average is in white. Take a look at how, guys, take a look at how Netflix has been struggling at what? At holding the 5 DMA as support. So what does this imply? That the buyers that are trying to buy the dip on Netflix are giving up very quickly. There's no conviction. And now you may ask, okay, Alvaro, but how can I know based on a 5-day moving average that we are starting to see some conviction? Well, that happens when the 5 DMA starts to rise. And take a look, we have clearly over here a declining 5-day moving average. So there's no conviction. Not only if we talk about long-term investors or market participants or market participants that could be thinking about starting a long-term position on Netflix, because this is a phenomenal company, guys. Let's call it for what it is. This is a phenomenal company. This is a legal monopoly. This is a company that has 0 competitors. 0. It's a fantastic company, but not even long-term investors are seeing, as of now, taking into account the technical short of Netflix, any value in the short term. Why do I say that? Because take a look at the 5 DMA. Netflix has been absolutely unable to sustain price above the 5-day moving average. So if any of you is interested in starting a position here, you have to wait until buyers step in minor time frames. So let's wait until the 5 DMA rises, and maybe Netflix can show us a rising 5-day moving average, and we can add to the recipe maybe Netflix recapturing the 20-day moving average. So the 20-day moving average is signaling as of now $92. In my opinion, guys, and looking at a 4-hour short of Netflix, it looks like it could be more likely to see a retest of $82. Let me pull up here I think that on a 1-year chart you can see this. Take a look at this. Take a look at $82. $82. What is $82? What about last year's low for Netflix? Do you remember the tariff fiasco that we had back in April? Well, we had a very fast and aggressive correction in the markets. Well, Netflix went down to $83 back in early April. I think that at $82, this technical short could be potentially attracting buyers. And if you show me a 4-hour short of Netflix, as it is looking as of now, I think that potentially it would be more likely to see Netflix revisiting $82 than going higher from here. So you have to wait. So don't buy the dip, guys. Buy strength after the dip. And there is 0 strength on this technical short. 0. This is an absolute no touch. And on top of that, guys, Netflix is about to report earnings. They report on the 20th. And we can make a case that the markets have already discounted or priced in a lot of bad news. But the situation here for Netflix, and some of you guys know that I love financial analysis. I am not only a technical trader, let's just put it that way. I also love financial analysis, and I know how to carry out financial analysis. I've been doing that during many years. So what we are about to start to find out when Netflix reports earnings next week is the first impact of acquiring a very toxic asset such as Warner Brothers. So I don't know. So if Netflix were pulling back into an upcoming earnings report without the purchase of Warner Brothers, I would think that the risk could be to the upside because the markets have already priced in a lot of bad news. But wow, acquiring Warner Brothers, guys, is like bad news. Let me show you something quickly, guys. Take a look at this disaster. Let me pull up here the balance sheet of Warner Brothers. Take a look at this, guys. Just to set an example, take a look at this. Let's look at the balance sheet of Warner Brothers. This company has a cash position of $4.3 billion. Take a look at the cash position of Warner Brothers. This garbage. From a financial standpoint, maybe Netflix is doing the right thing, guys. From a long-term perspective. Many people say that, right? Okay. This company has a cash position of $4.3 billion. Take a look at the long-term debt. Look at this, guys. $33.3 billion. Can you believe this? Can you see the mess that Netflix is getting into? So the markets are trying to figure out the financial consequences of the purchase of Warner Brothers. And if you reconcile this information with a 4-hour short of Netflix, you can tell that no one knows. There are no buyers. No one wants to buy this dip. It was a bad call, guys. Maybe 2 years out, 3 years out, the company's killing it. And we're getting, a new saga of Harry Potter. We are getting a new saga of, of Game of Thrones. Or whatever it is. But in the short term, it's a disaster. It's a disaster. So I would suggest to you guys to stay away from it. And of course, we can make a case here, guys. We can make a case. And again, guys, I never make any predictions. Okay, I am not in the prediction business. I am in the business of understanding the message that a technical short is sending me. I am in that business. I never make any predictions. I am thinking out loud here that at $82, we're going to have a lot of market participants calling out a potential double bottom here. I would actually give it a shot at $82. Not going to lie to you. But for me, to start the position on Netflix, as of now, with this very ugly looking chart, I need to see a rising 5 DMA and the 20-day moving average being recaptured. $92. And that's it. Okay, let's go over another stock. Let's go over to Tessie, guys. Tessie. Oh, you guys love Tessie. Let's go see the SLA down today 0.39% and closed the trading session. And it closed the trading session at $447. Not a good looking chart, but something that is a bit eye-catching is the fact that buyers stepped in and defended this blue line. What is that blue line, guys? That is a 100-day moving average. Guys, for real, you can use as many technical indicators as you want. But there are like some very basic technical indicators that you should be utilizing, that you should be using. Daily moving averages are very important. And there are like some very basic daily moving averages, such as the 5, the 100, the 200. Those are moving averages that are vastly used by institutions. So take a look at this blue line, guys. Support, 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 and support. And take a look at the slope, because that's another aspect that I keep pointing out for you. The slope of a moving average is very important, guys. If you guys are witnessing a stock that is pulling back into a rising moving average, that increases the likelihood for that moving average to potentially be able to act as support. It is potentially pushing price up. And in the case of the 100 DMA, look, support, $423. So the 5 DMA is starting to rise little by little. So ideally, at $461, it could happen. That 20 DMA is coinciding with a previous level of resistance that acted as such for Tessie on multiple occasions. So it is a potential level of resistance if maybe you're thinking about buying Tesla puts. And I would start to be constructive about Tessie above $461. Below $461, I would be cautious here and say that Tesla breaks the 50 on the 5-day moving average to the downside. Keep an eye on the 100 DMA, guys. Look, it's been acting as support and it is clearly rising. So it's a potential level of interest for buyers to potentially show up and buy the dip. As of now, the 100 DMA is signaling $427. Let me pull up here the market structure of Tessie. So what is the supply and the demand looking like? So look, this is a market structure chart. It shows us on top the demand or buyers for any stock, and at the bottom the supply is sellers. What do you see here, guys? The supply is the demand on top. Again, when I say demand, I am talking about the blue shaded region, or this blue shaded region that I am pointing out with my mouse. Take a look at the demand. It is clearly going down. The supply has started to go down as well, which could be signaling some sort of light at the end of the tunnel, but there's no demand. I don't like it. So I would be careful below the 20-day moving average, guys. 461. And if Tessie can recapture $462, that situation could be potentially attracting buyers. So that would be my take on Tessie. Yep. Let me see. Hey guys, by the way, I've been calling out Palantir for my boys and girls of Crescent of Saints Discord. Let me pull up here my channel. So here's the deal on Palantir. Yeah, I've been telling you to keep an eye on 180. I know that all of you guys love Palantir. So here's the deal on Palantir. Look, this is a software stock. Okay? So again, this has to do with with understanding the message that a technical short is sending us. So I'm going to ask you, what ETF does Palantir trades in? An important ETF, not, an ETF of, I don't know. So nowadays we have a lot of ETFs, like a lot. But I'm talking about an important ETF that Palantir belongs to. What ETF am I talking about? Exchange traded fund. What is it? An ETF with no redeemable securities. SPY. I mean, it trades inside the SPY. That's a good point, Frank. I give you that. But another one. Yeah, that's true. Good job, bro. You're right about that. Other than the SPY and other than the Qs. Yeah, that's a good one. Yeah, you're right about that. Yeah, sure. My bad. Okay. What important ETF? Do not ask ChatGPT. What important ETF does Palantir trade in aside from the Qs and aside from the SPY? I want to show you something interesting here. I think that I can make a good point. No ideas? No idea? Okay, take a look. Let me show you. IGV. Look, this is the software ETF. Ticker symbol. Oh, by the way, I can make my screen either smaller or pull it down. Let me see. There you go. So you guys can see the ticker symbols. My bad. So this is the software ETF, IGV. Yeah, we have it. Let me show you the holdings. Can I? Let me see. I can show the holdings probably. Let me see. Okay, let me show you. Take a look at the holdings that trade inside this ETF, guys. Look. Check this out. Look. Microsoft, Salesforce, Palantir, of course. So Palantir is the second largest holding. Oracle, Intuit, Uploving, Adobe. Check this out now. Let's check on some of these technical charts of all the stocks that trade inside the software ETF, just like Palantir. Look at this. Microsoft. Let's take a look at Microsoft. Mr. Softy. Take a look at this disaster. Let's take a look at Adobe. Another stock that trades inside the IGV. Let's take a look at what else. Let me see, what other stock do I have here? I have Oracle. Another stock that trades inside the IGV, ORCL. Take a look at this technical chart. Ugly. Yeah. Uploving. APP. Okay, this one is looking better relative to the other ones. What else do we have here? Intuit. Let's go see Intuit. Look. ServiceNow. Probably also trading inside the IGV. Take a look at this disaster, guys. So I can show you every single stock inside the IGV ETF. And I mean, 98% of the stocks that trade inside this ETF are looking ugly, ugly, ugly. Now, why is Palantir, which by the way, guys, and this is something that is worth pointing out, which is by far, guys, the most expensive stock inside this ETF by a mile. Why is Palantir looking constructive? This is what we call relative strength. So, why, if the markets, as of now, hate software stocks, or most of them, the vast majority of them, why they are not hating Palantir? That implies that the stock has relative strength. So, the second, in my opinion, guys, and this is the level that I've been calling out for my boys and girls of Crescent, of Saints Discord, the second, this stock burst above 180, 183, the door potentially opens for higher prices. Yeah, the stock is showing relative strength. And every single time that the 100-day moving average that I just told you guys about in the case of Tesi has been broken to the downside, buyers have stepped in and defended price. This is a constructive situation, potential, I would say, constructive situation for Palantir. That's why, and this is Christian's Discord, I've been telling you, keep an eye on PLTR above 180. But of course, if you buy calls that expire on the same day, it's a different situation. But this stock, given the current circumstances and given the fact that the vast majority of software stocks look ugly and absolutely ugly as of now, that implies that the markets are as of now, or that the net aggregate opinion of the markets is seeing or witnessing as of now something very positive in the case of Palantir. So I would still put on the table a potential bullish case for Palantir if this stock can consolidate above $180. It's possible. How? So what would have to happen that we would have to reconsider a potential bullish scenario for Palantir? We would have to see it trading during 1 or 2 or 3 or 4 trading sessions below the 100 DMA. Because take a look, guys. The 100-day moving average in blue, look, broke into the downside, recaptured very quickly. Recently broken to the downside, recaptured very quickly. It's an important moving average. And the stock seems to be consolidating. So I would probably be pointing out the same thing. In tomorrow's trading session, keep an eye on PLTR, keep an eye on Palantir above $180. Let me pull up here the market structure of our boy Palantir. Let's see what do we see here in terms of demand and supply. Look, the supply is rising, and the level of the supply sellers, guys, demand means buyers. But take a look at how the demand collapsed, and now it is starting to go up. This market structure chart is starting to point out in the right direction. And let me show you, because I think that we also have here an important aspect that is worth to be pointed out. Let's go see, guys, an anchored VWAP, an anchored volume weighted average price line that comes from where? From all-time highs. I also use a lot, and for those who haven't watched any of my live streams before, one of my favorite technical indicators is the anchor VWAP, a VWAP. That's an anchored volume weighted average price line. So what information does an anchor VWAP send us? It shows us the average price of the average market participant that started in position on a stock from a specific date. So in this case, all-time highs for Palantir comes in at $206. So if we display an anchor VWAP from all-time highs for Palantir again at $206, so Palantir went up to $206 back in early November, that implies that the average market participant that started in position in Palantir back in early November at $207 has an average price as of now of, guess what, guys? What about $180? That implies that as long as Palantir can sustain price above $180, those market participants, which by the way represent the very last important level of overhead supply above the current price of Palantir, that implies that those market participants are adding to their positions rather than selling out of their positions. So that is showing us some sort of conviction about the fact that potentially we have higher prices on tech for Palantir should $180 be hold as support. So that's your level, guys, $180. And I will keep pounding on the table for a potential resolution to the upside on Palantir if this stock can consolidate above $180. Needless to say, guys, so now we are supposedly invading every single country in the world. So we will invade Greenland, we'll take over Greenland, and now we are attacking Iran as well. And who benefits from that, guys? From any geopolitical situation that could suggest that the U.S. will be, let's say, acting from a, war, quote-unquote, standpoint. Palantir is a direct beneficiary of that situation, for sure, of course. So above 180, I'm constructive about Palantir. Okay, so what other stock you want me to go over? What about Amzn Amazon? Let's go see Amzn. Oh, by the way, keep in mind this. I didn't mention this before, but now is a good moment to do it. Come on, give me the N. I have an issue here with the N on my laptop. Come on, there you go. Okay, so I'm not going to make a full bull case here, but check this out, guys. So this is the map of the earnings reports that will be coming out until let me see, this would be until pretty much mid-February, right? Now this is January 12th. Hold on. Now, so this is, so in January, not February. So these are the earnings reports that will be coming out in January. So most of the Magnificent Seven stocks are way off. They are way off all-time highs. All of them. You know what stocks I'm talking about. I'm talking about Meta. I'm talking about Microsoft. I'm talking about also, of course, Nvidia and so forth. I mean, other than Google, most of the Magnificent Seven stocks are like pretty far away from all-time highs. So if you are thinking about buying any dips on the Magnificent Seven, Amazon included, you have to think about the possibility of a front running to take place into those earnings reports. So let me see. So Apple reports on the 29th. Oh no, yeah, we have some so we have some dates here of February, guys. So this is a map of earnings of January and February as well. So let me see. So far we have Apple reporting on the 29th. We have Microsoft and Tessie reporting on the 28th. And when is Amazon reporting? Let me see. Well, I don't see it here. If any of you happen to see the logo of Amazon, please let me know. But Amazon must be also about a report. Let me see. So let me pull up here Earnings Whispers, Amzn. So Amazon reports on February 2nd. I didn't see it, by the way, on the 2nd. Maybe I need to put on my glasses. No, I don't see it here. Yeah. So Amazon is about a report. This is a company that has been killing it when reporting earnings. And the question is, because this is a technical share that is actually looking better relative to most of the Magnificent Seven stocks out there, are we going to see profit taking or maybe a front running into the earnings report? As of now, guys, and Amazon went down today 1.57% and closed the trading session at $242.60. As long as the bulls can recapture the 5-day moving average, the 5 DMA at $244, this is a technical short that could be attracting buyers into it. So say that Amazon closes candles above its 5 DMA, again $244. A potential process of consolidation of Amazon above $244 could be opening the door for a test of $252, previous level of resistance back from mid-November of last year. Say that these 5 DMA, and again guys, try to think about the possibility of maybe Amazon pulling back, and say that we see some sort of front running into the upcoming earnings reports of most of the Magnificent Seven. So say that we see a bit of profit taking here. Say that the bulls of Amazon are unable to sustain price above the 5 DMA. Look at the 50-day moving average in green, coinciding, pretty much coinciding with the 20-day moving average in pink. We are talking about $234. Look at how these two moving averages are coinciding with a previous level of resistance at which Amazon failed on multiple occasions back in late November and early December as well. So maybe a pullback down to 234 could be a potential buy the dip opportunity. So in the case of Amazon, these are the two scenarios that I am thinking about. Potential process of consolidation above the 5 DMA to 144 to 145 bucks. We can actually round it up a bit. If that were the case, the short would look even more bullish, and we could see maybe, I don't know, maybe Amazon rising up to all-time highs before the upcoming earnings report. We are 3 weeks away from the report. If this 5 DMA doesn't hold as support, I would be interested in seeing Amazon retesting $233. The short looks good, but now let's reconcile this technical short with the market structure of Amazon. So let's go see the demand and the supply of Amazon. This is a tool, guys, that I love using, the market structure, because sometimes we see a technical short that looks very bullish, but when we reconcile that technical short that looks very good, a clear uptrend above all the moving averages. So sometimes when I reconcile that technical short with the market structure, you start to notice that from a market structure standpoint, we have like buyers starting to step in on that technical short. In the case of Amazon, demand on top, supply at the bottom. The demand is rising along with the supply. So this is a very good looking market structure short that makes me believe, guys, that if this 5 DMA is held as support, $144, we could see maybe Amazon going up to all-time highs ahead of the upcoming earnings report that comes out, as I just told you, on February 2nd. And by the way, and I guess that this is going to reconfirm, or that this will confirm to us the good technical situation of Amazon as of now. Let's take a look at an anchor VWAP that comes from all-time highs, guys. Take a look at this. If we take a look at an anchor VWAP, an AV-WAP of Amazon that comes from all-time highs, so Amazon went up to $258 back in early November, we get a price of $233. So what message is this anchor VWAP sending us? Well, that the average market participant that started a position in Amazon when this stock went up to $258 has an average price as of now of $233. So what does this imply in practical terms, guys? If you know that the average market participant that started a position on any given stock at its highest price ever reached has an average price below the current price of that security, what does that imply? That we don't have, for the most part, any buyers trapped above the current price of the stock. What does that imply? In practical terms, that we don't have important levels of overhead supply above the current price of the stock from which that stock could be potentially pulling back because of profit taking of buyers that are trapped with unrealized losses above the current price of the stock. So keep an eye on Amazing Amazon, guys. Above 245, we might be seeing this stock rising up to all-time highs, and in case of profit taken, and why not, buyers could be unable to sustain price above the 5 DMA. I am keeping an eye on the 20 and the 50-day moving average coinciding at $233. And there goes your Amazon analysis. Silver, SLV. What do you want me to say here, guys? I mean, What do you want me to say? Nothing to say. Gold, GLD. What's the ceiling here, guys? I just yeah, I'm remembering a song of the Black Keys. Gold on the ceiling, because we have gold and a ceiling, right? That's a good song, and also a bad joke. So I do apologize for that. So what do you want me to say here, guys? So what's what's the ceiling here? Take a look at this technical chart of gold, guys. Above all the moving averages, we have a 20 DMA that is clearly rising. The 5 DMA is also rising. 50-day moving average rising. I mean, every single dip gets bought up. I mean, look at the 20-day moving average, guys, here in pink. Support, support, support. So, would I be a buyer of a pullback down to the 20 DMA for $107? Yeah, sure. And remember, guys, the Fed, our beloved Federal Reserve, will be taken over by the government. Yeah, in May. By the way, some people don't know this, guys. Powell is likely to remain inside the Federal Open Market Committee. Some people believe that Powell is going to be gone in May, and that could be the case. But if Powell wants to, he can remain inside the Federal Open Market Committee as a voting member, by the way. So we are in a situation in which the U.S. government is telling the world that they will be taking over our central bank, and that they want super low rates. That is gasoline for precious metals, big time. And it's happening, guys. It's happening. Yeah, they will be taking over the Fed in June. So I don't see any bearish scenario in the case of gold, guys. So if the government effectively takes over the Fed, which is is happening, I mean, we have the president of the country saying that the president of our central bank, Powell, is a fool, is a jerk. I think he said today that Powell is a jerk and that he wants super lower rates. So what does it? So what is the consequence of that, guys? That we have a very dovish, that we will have a very dovish monetary policy, and that puts downwards pressure over the US dollar. And gold is inversely correlated relative to the US dollar. So I cannot think about a more positive catalyst for precious metals. So I am a buyer here. I'm not chasing gold here either, of course. But if you give me a pullback down to the 20-day moving average at $406, I am a buyer likely. I am likely a buyer. Yeah. So it is what it is. This is a gasoline being thrown at a fire. And in the case of silver, the same thing. Look at this. Unbelievable, guys. Take a look at this. Unbelievable. Yeah, it's pretty much unbelievable. And give me a pullback in the case of SLV down to the 20 DMA, $66, and I am buying it. So I am not chasing it here, and you know that these assets are highly volatile. But pullbacks down to the 20 DMA in the case of SLV and GLD, and I am likely a buyer. If that were the case, yeah. Palantir benefits from conflict, of course it does. Sure, yeah. Sure it does. Yeah, hey guys, we are, let me see, 53 minutes in, so we can go over some more stocks. Idan Limited. Let me take a look at Idan. Yeah. Wow, what a good looking short, huh? Jesus Christ. Yeah. I hadn't taken a look at Idan in a few weeks, and this stock is looking bullish. Up today 5%, and it closed the trading session at $53. So we have here a previous level of resistance that, if this level can act now as support, take a look. So Idan failed at $51 back in late September. Then Those same 51 bucks acted as support back in late October, then once again as resistance back in November. This is a big level, guys, for IREN, $51. A potential process of consolidation of Idan above 51 bucks could be very well attracting buyers into this technical short. And if that is the case, there is a potential unfilled gap to the upside. We're talking about $57. This is a very good looking short, guys. Look, above a rising 200-day moving average. The 20 DMA is starting to rise. The 100-day moving average in blue is clearly rising. The 5 in white also rising. So this is a very good looking short that is signaling that, of course, in regular market conditions, we might have higher prices on deck for Idan Limited. Very good looking short, huh? Let me reconcile that technical short with the market structure of IREN. Let's go see. Iris Energy. There you go. So, what is the demand and the supply of this stock looking like? Take a look at this. Take a look at the demand, guys. Again, this is a market structure short. So what you see on top represents the demand, the blue shaded region, and at the bottom the supply. The demand is through the roof. Look. And the supply is also rising, but the level of the supply is lower relative to the level of the demand. This is market structure edge. A very powerful tool. Yeah. This is a very good looking market structure chart that we can reconcile with a very good looking 4-hour chart. So now let's go see an anchor VWAP that comes from all-time highs, because this stock is still way off its most recent all-time highs. So let's go see. Idan Limited. And look, an anchor VWAP that comes from all-time highs is signaling as of now $47. So even though, guys, IREN is still 31% of its most recent all-time highs, above $51-ish, we don't have a lot of buyers trapped with unrealized losses. So that implies that, and again, in regular market conditions, above 50 bucks, IREN could be off to the races. And mind you, guys, why do I say regular market conditions? Let me show you. So take a look. Tomorrow, by the way, pre-market, we have some macro data reports that could be moving the tape. And actually, pre-market and once the trading session opens. So at 8:30 a.m. we have here. No, both pre-market, I think. Yeah, so pre-market, guys. I take that back. So at 8:30 a.m. tomorrow, we have the PPI data report coming out. So today the CPI came out below estimates. So the cooks of the Bureau of Labor Statistics did a good job lying to us once again about the inflation that we're dealing with in the US. So the CPI data report should cancel out any PPI data report. This is the producer price index. So the markets might not be paying attention to the PPI, but then at 8:30 a.m. we also have the retail sales report of December. And this could be a report that could be moving the tape. So every single technical analysis that I do for you is subject to the general market volatility, right? So that's why I'm saying, like in normal market conditions, above 51 bucks, Idan could be running. Yeah, that's why I'm saying that. Correct. And let me see, we are 58 minutes. Okay. What other stock you want me to go over? Let me see. You guys were asking about, I think that Lam Research, right? RCX. Lam Research. Take a look. Down today, a bit of profit taking, 2%, and this stock closed the trading session at 214 bucks. A bit extended, guys. So Lam Research is as of now trading 15% above its 20-day moving average. It's extended. I wouldn't chase it here. The 20-day moving average is the pink line that I am pointing out with my mouse. The 5 DMA is clearly rising, but I wouldn't be surprised if this 5 DMA is broken to the downside and we see a bit a bit more of profit taking. Oh, by the way, guys, and also keep this in mind. So, in my opinion, the most important market event that will be taking place this week is this one. So on Thursday, we have Taiwan Semiconductor reporting earnings. This is a big report, huh? Yeah. So Taiwan, guys, manufactures 90% of NVIDIA chips. It's a big deal. So as of now, we are seeing like a very clear difference, right? Let's just put it that way, from inside the semiconductor industry. So we have like memory chip stocks flying, your Micron, your SanDisk, your Lam Research as well, kind of related to that theme. And we have NVIDIA, like doesn't doing anything. Today, Broadcom went up. I mean, $2 only. We didn't end up selling enough. So we are seeing like a very high concentration when it comes to semiconductor stocks that is favoring or in favor of memory chip stocks and stuff like that. Watch out for a potential situation on Thursday where Taiwan Semiconductor kills it and the markets kind of assume that NVIDIA is also killing it still. And the demand for NVIDIA chips is very, but very, very, very high. So if you're trading stocks such as Lam Research or Micron or SanDisk, I would be careful here, guys, because maybe this is an idea. And again, I don't make any predictions. I don't make any market predictions. I just follow the technical charts. There could be a situation on Thursday in which Taiwan kills it. They present a very positive outlook, and the markets say like, maybe we've been a bit unfair with NVIDIA. So let's take some profits here on the Microns of the world, on the SanDisks of the world, and on the Lam Research of the world, and let's go for NVIDIA. This could be a potentially interesting situation on Thursday, okay? I'm not saying that will be the case, but, if you're making a lot of money now on Micron and SanDisk and stuff like that, I would be a bit careful here, because the report of Taiwan Semiconductor could be helping, the NVIDIAs of the world and the AMDs of the world and the Broadcoms of the world, all right? So, and circling back to Lam Research, RCX, let me see. There you go. Here it is. I wouldn't chase it here. A bit extended relative to its 20-day moving average. It is a very good looking chart above all the moving averages. We have a rising 5 DMA. I would be a buyer of dips here. Maybe, I don't know, maybe down to this previous level of support at $194. And don't get me wrong, this is a very good looking chart. So this stock could keep going up. As long as the 5 DMA holds as support, I don't know, you set the price. 250, 270, who knows? But I wouldn't be chasing these stocks ahead of the earnings support of Taiwan Semiconductor, which again comes out overnight from Wednesday to Thursday, 2 a.m. Eastern Standard Time. I wouldn't be chasing it here, so don't chase these stocks. I mean, I wouldn't be chasing these stocks, to be honest with you, and I would be maybe a buyer of pullbacks, as I'm saying, down to $195. Ish. Yeah. Roblox was able to catch a break today. RBLX. Still a very ugly looking chart. It's in a major downtrend. The 5 DMA, and again, guys, I use a lot. This is by far my favorite moving average, the 5 DMA, and you saw the way that we utilized the 5 DMA today in a very successful way in our Discord. So the 5 DMA is starting to rise. That's positive. The bulls were able to recapture the 20-day moving average, $81. So a potential process of consolidation of Roblox above $81 could be opening potentially the door for a test of the declining 50-day moving average at $91. And mind you, guys, This is another stock that will be reporting earnings soon. Let me pull it up here. So I am a bit curious about, again, guys, the markets potentially front running some stocks into the upcoming earnings reports because those stocks are way off their most recent all-time highs. Roblox could be one of those cases. So Roblox reports on the 5th of February. So a potential front-running operation into the upcoming earnings report is, we can say, on the table. The technical chart, despite the fact that we are in front of a major downtrend in minor time frames, is starting to look a bit better. And the 5 DMA is trying to rise. That is positive. So maybe there's a potential a potential gift. Why not? A potential fill, a potential gap that could get filled up to the declining 50-day moving average at $91. But mind you, guys, if I zoom out here, take a look at this disaster. This stock is, as of now, let me show you. And despite the fact that it's looking a bit better because Roblox has been able to go up for two consecutive sessions. This stock is still 44% of its most recent all-time highs. So that implies, guys, that this is bag holders central. We have buyers trapped all the way up. And if you have a position on Roblox, guys, a losing position on Roblox as of now, at an average price of $96, what would you do if Roblox goes up to $96 in the upcoming, 5 trading sessions? Most of you guys will be looking in the profit. And in order to show you how bad the overhead supply for Roblox is as of now, let's use some anchor VWAPs here, guys. Look. Take a look at this. An anchor VWAP that comes from all-time highs is signaling $112. Guys, we have buyers trapped with unrealized losses on Roblox with an average price of $112. What do you think the vast majority of these market participants will do whenever Roblox goes up to $112? So, long story short, don't fall in love with downtrending stocks. And yeah, maybe there's a bit more of room to the upside up to $91. And this is a company that usually reports better than expected. So I wouldn't rule out either a potential front running into the upcoming earnings report in the case of Roblox. Oh, by the way, let's take a look at the market structure. And what do we see here? RBLX. Let me see. RBLX. Okay. And so the demand is going down and the supply is trying to rise. So I wouldn't trust this pop, to be honest with you. Yeah, the market structure doesn't look good. And the market structure doesn't suggest that we actually have buyers stepping in minor time frames, despite the fact that the 5 DMA is trying to rise. So I would be a bit cautious with this recent pop during 2 consecutive trading sessions on Roblox. Hey guys, here's the deal. So I didn't stream for you during the last 3 weeks because I was out of town, the end of the year, the beginning of the year and stuff like that. So I will be doing this every single Tuesday at around 4:10 p.m., 4:15 p.m. So if you do like my technical analysis, we can also do, by the way, financial analysis if you want me to. I can do it. I know how to do it. I love it, actually. We do it today, kind of, on Netflix. So, keep me in mind for next week. And for the members of both Discords, guys, mine and also Christine's, yeah, we'll stay in touch. We might have an interesting we might have an interesting trading session tomorrow, and let's keep an eye on Palantir. And full disclosure, we are on Apple. Did you buy Apple with me, Sue? You gotta be an Apple with me. Yeah, full disclosure, guys, we have a position on Apple. And you didn't ask about Apple, by the way, but yeah, we can wrap it up with that. Yeah, many of the members of my Discord are on Apple with me as of now. We are believing, and we were talking about the 100-day moving average, guys. That take a look at the slope of this rising 100 DMA. Yeah, Zoo is with us. Is with us. Yeah, we started the position on Apple yesterday, based on the slope of the 100 DMA, and also based on a stat that says that whenever Apple goes down during 7 consecutive sessions, we have a very high likelihood of having Apple being higher in 3 weeks and 1 month. So yeah, we are on Apple as of now. Say that Apple can consolidate above the 100 DMA and the 5-day moving average, which as of now are signaling $260. We are expecting potentially that situation to attract buyers into this technical short, and if that is the case, we're going to be closing this trade. I'm knocking on wood, making a nice profit. And by the way, guys, this is another stock. We were talking about Mag 7 stocks that are way off their most recent all-time highs, and that could be potential candidates for front-running operations into the upcoming earnings reports. And what about Apple, guys? And by the way, Apple reports. Let me show you Apple reports on when is it? Apple reports on the 29th. So keep an eye on Apple above $260. Yeah, we opened the position yesterday, and yeah, maybe we can close this position, making a profit, hopefully. Thank you, guys. It's been a long day for me, super long. I still have a lot of things to do, and we are and I went on 11 minutes. Jesus Christ. Thanks, guys. God bless you. See you in the Discords. Yeah, both. Bye, guys. Thanks. See, and of course, we will get together. I mean, this goes for my guys and gals of Christians. I will see you guys live on Tuesday. In the case of the members of my Discord, we are getting together on Saturdays, and I am actually also hanging out with them during the trading session. So thank you, guys. Take care. Love you. Bye-bye.